Is brought to you by Fisher Funds. Over the last 9 months, we've been speaking to the team at Fisher Funds about KiwiSaver and also about investing. So as we approach the end of the year, Chief Investment Officer Ashley Gardyne is with us to give us an overview of the year in markets and his thoughts on what 2025 might hold. Morning, Ashley. Good to have you on the program. So 2024, interesting year for the markets. Can you just summarise for us why?
Yeah, 2024 was certainly an eventful year, and if you think back to the start of the year, things were looking pretty rocky. We had global inflation that was still really elevated. We had high interest rates, and as a result, a risk of recession globally. So people were a bit concerned. Fast forward to today, coming into Christmas, global markets are up 20% for the year, so that's been really positive. Essentially, that's been driven by inflation that's come down, interest rates that have followed, and it's been really good for the economy, but also the corporate sector as well.
Yeah, talk to me about corporate resilience.
Yeah, so ultimately, for the share market to perform really strongly, you need to have a strong corporate sector. Yeah. What we've seen this year, particularly in parts of the world like the US, is some really big companies like Microsoft, Amazon, Meta driving some really strong profit growth, but not just the big companies, it's been the smaller companies as well, benefiting from things like AI and software as well.
Yeah, so in terms of corporate resilience, how does that drive the market success when we're looking back at 2024?
Yeah, so it's back to that point that if the share market's to do well, the global economy has to do well, corporates have to do well. And what's been really quite impressive this year is just how adaptable companies have been, because companies were dealing with some pretty significant cost pressures, particularly earlier in the year, and those high interest rates. But with central banks having brought interest rates down, companies are feeling a bit more confident. They're making some of those hiring decisions and investment decisions they might not have been making previously.
If we, again, take a look back at the year, what are lessons that investors can, look back on?
Yeah, I think it's always important to take lessons as an investor, and I think probably two key things for me this year. The first one is to always separate investing from politics, and if you think back to the start of the year, there was a lot going on geopolitically, but there were also some pretty big elections that we were looking forward to in the US, but also Europe. But despite all of that and some pretty abrupt headlines at times, markets have pushed higher. So if you focus on the economic fundamentals, not so much the headlines, that tends to work. But the second key thing, I think, a lesson this year, but it was last year as well, was a lesson for New Zealand investors to be globally diversified, and thankfully most KiwiSaver investors are, because this year, as I mentioned, the tech market in the US had a really strong run, but the share market here was a bit weaker. So if you're diversified and have a long-term view, that tends to work.
All right, 2025, crystal ball gazing, what is the outlook?
Yeah, I think the economic backdrop is really supportive, which is good. So as I mentioned, inflation has come right back down. That should allow central banks to follow through on their promises all around the world, essentially, in cutting interest rates. And with lower interest rates, combined with low unemployment, that should mean as we go through the year, the consumer strengthens. So that should be good for the economy. The only offset is that some of the economic positivity has already been reflected in markets. So global share markets are already quite a bit higher this year. So valuations are a bit more elevated, and we see that in certain parts of the market. Some parts of the tech sector are starting to look elevated, but also we're seeing some sort of bubbly behaviour in some asset classes like cryptocurrencies as well. But if you look broadly, we're still seeing lots of good investment opportunities, which I think is something positive to look forward to for next year.
All right, Ashley, Merry Christmas.
Merry Christmas,
to you
yeah.
And yours. I know today's your last day before you have a break, so enjoy that. Ashley Gardyne, Chief Investment Officer at Fisher Funds. Thank you so much.
Great, thank you.
It is